What is up, everybody? It is Tuesday, January 28th. Just giving you guys a quick trade recap on the trades that I took today and understanding this crazy price action that we've been having lately. Obviously, we had this massive dump on, Sunday night into Monday. And we kind of just hung out here for the rest of Monday. But today, I actually came in with a bullish bias, and I'll tell you why. Basically, we did sweep this level of liquidity right here, right? We have that level right there. Looks like a liquidity grab to me real quick. Now, I was expecting price to come down and then take that out, come up, or I wasn't expecting it. I'm saying after seeing that it did that, I'm expecting it to retrace back on up. Now, an area that I expected to hit at least is this OTE area from this price leg right there. We have a very nice 4-hour fair value gap sitting in this area. I do want to see some kind of rejection off of that to continue going lower, because I think it is a pullback that is necessary to be able to hit this 305.50 level. It is necessary to have that pullback on the weekly chart because we have been just completely pumping, no type of retracement. So I came in with that kind of expectation on the 4-hour. There was really nothing that was confirming that for me, as the order flow was still bearish. We were inside this 4-hour FEG right there at the open. We were right here. So let's take a look at the hourly chart. Now on the hourly, on the other hand, I was bullish. All right. And the reason why I was bullish, if we look at the price structure, we have that low, high, higher low, lower high, but we have a higher low, higher high. Now this low is a lower low, but we did sweep that. Okay. We swept that and came right back up. And I was expecting now price to go higher because of that sweep. It was such a strong move down and then getting bought right back up, actually taking out another level of liquidity right there. Let's mark that out. And overall, we are disrespecting the bearish fair value gaps. There really wasn't any bullish ones. Sorry. There weren't really any bullish ones to base price off of. So I went down to the 15-minute time frame to see what it was doing there. And I just waited for the first 15 minutes of open. I wanted to see what it was going to do. Seeing that it got bought right back up and traded back within the range off of this price leg here, I wanted to see price close above some kind of a bearish fair value gap. Now, I was eyeing this one right here. Okay. And if we did get a closure above that, so this actually happened at 10:30. 10:30 was when we got that closure above. I was looking for price to move on up to this draw on liquidity, which is the beginning of that 4-hour fair value gap. I wanted to hit that as a very conservative target. If I got a 1.5 or a 1 to 2, 1 to 1.5 or 1 to 2 risk to reward, that was more than enough for me as a trade. Now, you see here how price moves on up. Now, there are two 15-minute fair value gaps that got created here. Typically, I like to have that retracement down into the second one and then the bounce off of it. But I also have noticed on NASDAQ, if it has yet to hit the draw on liquidity and it wants to hit that, it's going to use the first fair value gap that gets created on the 50, or the first one on that price leg. To be able to bounce off of that. So that's what I came in with. I wanted to see what it was going to do. I waited patiently to see overall what the structure was going to be on the 15-minute time frame, seeing as to how the 4-hour and 1-hour wasn't really painting any kind of clues for me. So the first trade I took was actually at the 1050 macro. It was right here where we got the invalidation of this bearish fair value gap right here off of this price leg right here. So we got that closure above. I actually market ordered in right up there. I put my stop below the swing low. Now, this trade, I manually closed it out early because we did invalidate this 1-minute bullish fair value gap right there. Because if I wanted price to continue moving higher, I would have wanted that to act as support. And we also did not hit this swing high. So creating that lower high, invalidating that 1-minute bullish fair value gap was more than enough for me to close that trade out early and wait for the next macro time frame to find a setup. Now, on the next macro, that was 1150 right here, I was eyeing this 1-minute fair value gap right here. I wanted to see how price was going to act in it. And as you can see, right, we have this bearish fair value gap right there. Price comes and invalidates that for the macro. and then we trade back into it. Now, we also have bullish fair value gaps right there that held up price. And when I saw that price started to trade very aggressively out of it, I market ordered in. So my entry was actually right here at this time. Okay. And this trade was a 1 to 2.79. I targeted that draw on liquidity that I had before. And I put my stop below the overall swing low, right? So this right here, because if price was going to continue moving higher, there was no reason for it to move on up and then come back down here. So that was the reason behind my stop loss there. As soon as we displaced above this high right here, I actually moved my stop right up here. And then moving above this, I moved my stop to break even. Actually, in this trade, I think I experienced no drawdown. So overall, a very good trade here. So first trade, didn't hit it. It wanted to come back and sweep some more liquidity. Totally cool with that. I waited for the next macro time frame because I always wait for time to align and then for price to show me the setup. And so here was that setup. After the fact, we dipped right back into it and it worked out perfectly. So nice 1 to 2.79 risk to reward. Hit the draw on liquidity. There were other setups here in the PM session, right? If you were still bullish, which there was no reason why you shouldn't be. There were quarterly theory setups too. If we take a look, we have accumulation here in Q1. We have a manipulation below the swing low there into a 15-minute fair value gap, actually taking out those relative equal lows. And then as you can see, you could have taken the invalidation of this 1 minute fair value gap right there. Would have been your entry around here. And then it just moved on up so nicely. It actually was a what? Let's see. It hit at a max of 1 to 2.4. So if you targeted a 1 to 2, that would have been more than enough for you, right? Since we had already hit the draw on liquidity. But this was a trade that one of my students took. Very proud of him. Shout out to him. He knows exactly who he is if he's watching this video. But overall, the price action today was very clean, right? You know, you've got this accumulation here, a manipulation below into a swing low that was a liquidity grab. You get that 1 minute inversion right here. Could have taken your entry right there if you wanted to play it very early, if you were super bullish overall, and that would have been pretty much the bottom. So yeah, good price action. Hopefully you guys did not end up red today, and we'll see what tomorrow brings, and I will catch you all later. Peace.